Very good day to have you on the show, Doc.
Thank you very much. It's a great pleasure to be here.
All right, so let's start. Now, first and foremost, something great has come out of the Nigerian GDP report, which suggests that the oil and gas sector have contributed to the 4.23%. But what did they contribute? I'm talking about the oil and gas sector, contributed 20.46%. A sharp contrast to what it had of 1.87% in the first quarter. But what's your reaction to this new improvement in energy supply, energy efficiency with over 20.46% contribution to the GDP?
Very excellent, contributions, because it means that we're able to have a great intermarriage between producing and consuming energy. And in several forums, I have actually said that in the first instance, you only make about 15% out of your entire petroleum value chain by just getting the barest minimum of production, and then, kind of processing it to the right spec and then selling it off to buyers. But for every barrel that we begin to refine in country, for every time that we are producing something, manufacturing sector is going on and using, gas, we are creating jobs, not only across the primary, side of the value chain, which means that there needs to be more exploration activities. That's the primary side for us to have more oil and gas. But also in the secondary side, because it means the gas subsectors needs to work, the refining subsectors need to work, and then we have the tertiary sectors, like all of the other service sectors that will come up to support, whether it is management, consulting, whether it is the medical, whatever needs to come up to complement the primary sector. And so Nigeria has just taking a stab, for lack of a better word, at the 85%, which has remained untapped for so long a time. And not only that, I think the story gets even more interesting, that as we begin to open up, avenues, become a net, exporter of petroleum. Of course, the other day we heard about the Dangote's, consignments getting into the U.S., of refined products getting into the U.S. It therefore means that there will be a favorable tilt in the balance of trade in Nigeria. It means people will also be asking for more naira. You can also see the attendant effect on the appreciation of the naira.
Exactly.
So all of these things shows that we have, done something very decisive about our industry, and that we're turning things around, and great job that we are also identifying new acreages to contextualize so that the investors can come in and take advantage of all of these opportunities.
Exactly. Interesting. Do you know that when this report came out yesterday from NBS about how the energy sector, the oil and gas have contributed 20.46, I was so happy, because I recall last year it was like a mixed feeling from the energy sector, particularly oil and gas, contributions to the Nigerian economy. And when we started this year, the first quarter, we saw a bit of hanky-panky within that sector, whereby a lot of us were like, what will happen to the energy sector, the oil and gas? And our fear was confirmed when we heard and saw that it only contributed 1.19%. But kudos to what has happened at this point in time. 20.46% is quite interesting. But from your own understanding, a lot of issues have been raised that have contributed to this growth that we are seeing. But from your own perspective, as insider in that sector, what do you think really amplify the growth that we are seeing at this point?
I mean, absolutely. The answer to those questions are already embedded in the expose I gave earlier. And first, we need to understand that we are now consuming the energy in the first instance. That's the first thing. For example, we are now refining and consuming our own petroleum products. By so doing, right, we have created jobs. By so doing, we are now using this to power our own economy. So, of course, it's not just being exported. It is now having a ripple effect on the productivity of the economy. That's really the first and foremost thing that we have been able to achieve. The other thing that has helped, that the oil and gas has assist in the GDP of the country, is that, look, yes, we are having power issues, but right now, in some parts of the country, predominantly those that have access to the band A, and those industrial users, there have been a clear increase in the power that is being given to them. And then when you add that with the Nigerian first policy of the president, it gives, I mean, we are not there yet, but it also gives an ample opportunity and a very welcoming signal to anybody that is doing manufacturing of any sort, to encourage them and say, okay, go into this production. And more so, one thing we need to understand is that even those manufacturing sectors are now the ones filling the shelf of some of these big outlets. And of course, powered by gas. So get where I'm coming from, how I connect the dots. Powered by gas. I read the other day on a paper where I was looking at the strategy of the guys that used to own ShopRite. And they had rejigged their strategy to focus on the smaller stores and also to do more of 80% sourcing from within the country as a way to be able to, be able to get their, strategic advantage versus other competitors, right? And when you look at that, 80% of their sourcing is going to be in country. They say they're not importing as much again. That's a change in strategy. And ShopRite is a big one. And you can go around. A lot of the businesses that sell in the retail side are having they are collecting goods from local producers who are now producing more and then putting it on their shelf and selling. And people are proudly buying the Nigerian brand. So it makes a match. We now have the gas subsectors guaranteeing power to some extent, and then we now have the Nigeria First policy that is even being looked at as a very strategic, plan and approach by businesses for survival reasons. And so all of that then has a trickling effect from a primary side to the secondary and tertiary side, and impact from the oil and gas sector all the way down to the service, and then of course the retail sectors.
Interesting. Now, having said much in that regard, let's also take a look at what some nationals are doing in this regard. On this show, we had the opportunity to ask a question about Akwa Ibom State taking a headlong on gas plan initiation in the state. But we have also seen that Akwa Ibom State government is also diversifying its energy source by taking a look at electricity. Just a few days ago, they held the Akwa Ibom State Electricity Market Seminar. What do you make of such seminar when we bring a lot of experts together and trying to look out for a strategy to really empower the state? But what do you make of the seminar?
All right. I mean, for me, that is a very good step, in the right direction. Of course, it's a way to brainstorm the next steps and really understand, okay, fine, we've now got a signal to begin to operationalize our own electricity market. So, things like, do we have a regulatory commission at the state level? Do we even have the laws on how the electricity tariffs will be rolled out? Do we have a strategy? And a lot of these are still on blueprint. But of course, it signals that Akwa Ibom is ready to look at, the aspect of creating or stimulating that market, vis-a-vis also creating the enabling regulatory and governance framework to support the electricity. So it's something that I think it's a welcome development, and we would see more states take a cue from there. But what will make all of these come to fruition is where we begin to match a lot of those intents and, of course, actions with results. That's the key thing. We want to see how we begin to, break down some of those action items that come as a result of these, summits, and then how we steward the execution of those action items all the way to when we get the final results and we begin to get improved electricity for commercial purposes and also for domestic purposes.
Interesting. I will quickly take you on one of the statements coming from the governor when he gave his keynote address at the summit. He was so specific about his ambitions and drive to have energy, electricity, sustainable and durable in Akwa Ibom State. And he made impact by saying that investors should be ready to pull their money down because the government is also ready to ensure that investors gain and recoup their money going forward. With such statement, how would you rate the governor and the state at this point in time for this energy diversification they are taking on?
I mean, it's again the sort of confidence I would like to see, and again, the die has been cast. Interestingly, so the governor has put out a signal that Akwa Ibom State is ready, and by the grace of God, we are. Every expert of Akwa Ibom extraction is very much ready. The energy sector and the power sectors are more of the same sector, but on different sides of the same divide. So we are ready. And I think that's not just a clarion call to the investors, it's a clarion call to every Akwa Ibom son with contacts around the world that we are ready to be able to support and get this into fruition by the grace of God.
Exactly. Interesting. And not just Akwa Ibom State alone. Delta State is also planning a similar summit coming up. But for them, they are looking at how to deepen the gas exploit and gas enhancement for sustainable energy provision in the state. And I know quite well that you are so passionate about the gas. But what would be your advice to the state government, the two of them, the Akwa Ibom State government and the Delta State government, that the gas aspect, the gas plan, the gas roadmap they have all initiated for themselves, they must ensure that this is followed through, because without it, you people in that sector understand how important this will be. But let me have your take on their, around the gas implementation for this electricity energy drive they are taking on.
Well, I think the very first place I like to start from, because I've been a risk manager before, is to encourage people to go back to the lessons learned. We had a gas master plan before even all of this gas revolution in Nigeria again. What failed? What caused it to fail? Are those factors still present? And then how do we now mitigate the risk? Or are there things that can make us eliminate the risk? I think is the most important thing. And if you look at the gas electricity market, one of the key things you're going to find is that very much enshrined within that market is the issue of debt. That's a very key thing. If you do not talk about that debt issue and figure out how to solve it, then you are just doing a window dressing. You haven't even scratched the problem itself. So debt is a big problem. And this is what model I'll give for free without any consultation charges to any governor who wants to take that approach. The first place is to jumpstart your gas electricity sort of venture and ensure bankability is by creating an industrial hub for all producers of small scale, whether they're doing shoemaking to tailoring, to people that are doing small scale manufacturing, to people that are doing processing. Get them an acreage of land around the metropolitan areas and then get them to set up their shop in there. You can even set it up and then extract it, or get it from their taxes later or whatever charges or whatever agreement you're going to make with them. Now, what that means is that imagine if there's an entire acreage that is full of people that are producing, and then we can then quantify their power requirements. So when we quantify the power requirements, and we're generating, we know by default, because these guys are making money, that they would be very much at the 90% confidence levels of paying for the electricity. Because if you now give to normal people who are perhaps maybe not able to afford as much, you give them that power and you put it into the neighborhood, there is a high chance that it is going to undergo energy theft. And you're going to be losses. And for a new investment at a time where the time value of money is quite high, you would be making a lot of losses, and you could even shut down if you do not have the financial firepower. So I always say more of an 80-20 rule, where Pareto, the Italian mathematician, economist, and all of that scientists said, he said, look, you have to focus your, on growing the 20% of the market that is going to pay you 80% of your revenue. And that's the way I think about it. Begin to, yes, the 80-20 rule simply says that it is the 20% of the market that is going to give you 80% of your revenue. So if I were to be the governors, I'll begin to create an allocation of an area where manufacturers of small scale producers, service industries need electricity will even start being there. And at that point, we'll do an energy audit, find out how much electricity they need, find out how we can, charge this electricity from them so that there's guaranteed payment, bankability, and get an investor there and say, look, whilst we have a laudable plan to roll out this many megawatts of electricity, this is phase one. Phase one is going to be roll out this amount, and the 80% of your money is going to come from this industrial hub, and the rest you can give it away to the surrounding environment. And then when that sounds bankable, we will scale from there. Now, how do you guarantee that the 80% that those guys you've brought in, the manufacturers or producers, get the money to pay for some of these bills? The way you guarantee is by also personalizing at the state level the Nigeria First policy. You begin to place orders, make a law at the state level and say, look, we are going to first patronize, even if it is a procurement in government, we give 60% quota to things that are produced in our state before we go elsewhere. So by the time someone is buying food for government, he has to go to the state producers and market people in that state. By the time someone is buying things is trying to bid out something and say, okay, we want to do an event, we want to do maybe a diary, is looking first at people in the states, not just going to export or do it from abroad and fly it in. So that's how we build capacity. When you can do that, you can stimulate the economy. I can tell you for free that you will be able to create a cycle of very efficient economy within that state.
Interesting. Now, Doc, I also want to take you on. We have looked at the South, using Akwa Ibom and Delta State, who are taking the drive to improve electricity via energy mix of Nigerian, circle. But in the North also, in few days' time, the Northern State will be organized what they call the Northern State Investment Forum. One of the key agenda for that forum is about energy. And, in the North, we had a lot of sunlight. Also, the hydro system is also very, very, feasible in this area. But what would be your advice to them? Even though everybody is waiting, cap in hand, for the AKK gas pipeline to be fully operationalized. But at this point in time, what do you think they also need to do to drive their energy sufficiency and sustainability at this point, just like the South State are also doing?
I think we need to understand that in between ambition and reality stands innovation.
Exactly.
That's the very key thing. And innovation, the clarion call for innovation is now. Let's look at it. Right now we have the virtual pipelines, CNG trucks. And so, it will cost a bit more than laying big pipelines. But yes, that is where we begin to establish business partnerships. Whoever is already thinking about a gas market and has that market captured can enable supply using the CNG virtual pipeline, which is what they call it, the CNG trucks. That would then so you have a mother station that is, kind of compressing all of the produced pipeline quality gas from the south, compressing all of it, and then putting it into those trucks. Those trucks bring it, and then you can then get a daughter station that offloads it into storage tanks, and that could be even a way to be able to fix the midstream and the downstream of the gas sector, you know, away from producing what we now have a challenge. Remember, necessity is the mother to inventions.
Exactly.
We have a problem, and that problem is occasioned by the infrastructure or the lack of it. And so we want to be able to take the gas from one end to the other. That's where technology comes in. So I'll tell them, business partnerships, synergy, and the adaptation of innovation. Those are the key answers to be able to bridge the gap whilst chasing the issue of putting the enabling infrastructure in place.
Interesting. Now, let's get back to the oil and gas sector of our discussion, particularly the oil production of Nigeria has been regarded as one of the key elements that made the affirmative growth in the second quarter's contribution of the oil and gas sector. And for NUPRI, that be Nigerian Oil and Petroleum Regulatory Commission, they say particularly that we have been able to meet up with the OPEC quota for our production. And you could recall that in the course of production, we had 1.4, 1.5, 1.6, even up to 1.8. But Doc, what's your take on all these production quotas that we've been able to achieve? And, is there still room for improvement? Because the target per se for the president is about 2 million barrels per day.
Of course, there is room for the, for us to push ahead. Now, let's even define the quota or what that quota means. The quota is simply, OPEC runs a very flexible structure. And that means that if they give you what they think your production capacity can meet, and you keep exceeding it, they're bound to allow you, even get a higher target. So it's nothing cast in stone. The last time we spoke, and we talked about what OPEC was doing, and I told you part of why OPEC has increased the quota of its production and is to get the share, but more so of the market, but more so because a lot of people, a lot of these members were already exceeding this. So it was like, okay, let it not look like the rest are still trying to operate because within our quota system and others are advantageously getting above it. So let's all give an increase to the quota limits for all our members. And that's the way it worked. So it therefore means that the challenge that Nigeria has is to, get out there, get a lot of these resources off the ground to create a commonwealth for ourselves. The barriers are non-existent. They're more of a mirage than reality. Because even the OPEC quota itself is not limiting in the context of what I've explained to you, that the OPEC quota itself is just the limitation that you see as OPEC quota is only based on the country's production capacity.
Interesting. So in this regard, Doc, are you still there?
Yes, absolutely.
Okay. So in this regard, in terms of this limitation that we have seen, but what do you think we can do better? Because for the President Bola Ahmed Tinubu, even though his eyes is to diversify the economy to the non-oil sector, he is still very, very passionate about ensuring that we have a sustainable oil production. But going forward in this regard, what would be your advice to the president? He has issued presidential order in the oil and gas sector. He has been able to attract millions of US dollars to that aspect, but it seems that there is still gaps that we are yet to fill. You did make mention of oil theft as one of the issues. You did make mention of infrastructure deficit. But going forward, how should we be able to address this thing going forward in the country?
All right. So quick recap on what has worked for Nigeria so far. The first is that we have been able to bring oil theft to below 5,000 barrels per day. The second thing that has worked for Nigeria, even when a lot of people even expressed worry that whether it was going to work or not, was the divestments. Right. So divestments, in what we name as divestments is a very deep and rather grayish, rather than white or black, is a bit grayish in nature. I'll give you context. When a company, an IOC, decides and announces that they are going to divest, prior to that announcement, 10 years back, they have already made a management decision that they're going to wind down, but they're not telling people that. Now, they don't want to create panic in the stock exchange market, neither do they want to create any unrest. So, or any resentment within the team. So they start already nursing the idea of divestment and coasting down. They're already coasting down to zero. From whatever they were doing, coasting down. Now, think about what the opportunity cost that we have lost in this whole coasting down process if it lasts 10 years. It means we have lost opportunities to expand our portfolio. They have even lost opportunities to even, keep the basic facility maintenance requirements needed to even run these facilities. They don't care. They don't want to spend money. They just want to exit. And so now I'm contextualizing the psychologically impact of the whole thing called divestment. So what we have seen that companies that divested today is about 10 to 15 years of lost opportunities in terms of growth. And we have also seen that by the time companies like, Seplat took over, they were able to add 50,000 barrels per day minimum to their production without, without doing much. Sincerely, without doing much, they were able to add that because the country has divested to nationals who have the expertise, they have the funding, and now they have taken ownership. That's the key thing. Nobody would reform Nigeria more than ourselves with no external person. And we have seen it. Nigeria's production, everyone's worried, when the divestment happens, what would happen with the industry? For the industry has thrived because we have injected a special element called taking ownership. So that's the second thing that has worked. The third thing that has worked for this sector is that there has been a presidential directive on oil and gas reforms that has meant that all of those bottlenecks that used to encumber, I think there were 2 presidential directives or more now, that used to encumber activities have been shattered. Yeah, sorry, I mean 2 sets. What I mean by 2 sets, they were given a different time, but total of 4, that used to hamper those activities have been removed from the way. Now, so the third and the fourth and important ingredient going forward is going to be a lot of exploration activity. So in concept, we talk about 39 billion barrels of crude in proven reserve. But, unless we begin to break them down into acreage, the challenges, the opportunities within each of the acreage, we cannot do a bid round. And if we cannot do a bid round, then how can people begin to develop a lot of their assets? Thankfully, we now have the drill or drop provisions that means that people have to go into beginning to develop their assets. So those are things that have worked for us. And then the big elephant in the room is the elephant of funding. We cannot talk about growing our assets in a time where the return on investments on oil and gas investment is also competing with return from all of these disruptive sectors like the AI sectors, like the tech sectors and all of those other sectors, even the content creation sectors, the creators economy. These investors, I can tell you for free, investors may be minute in numbers, but they have a lot of diversified portfolios. So the same investor that is investing in AI may also have some investments in the oil and gas sector. And so what that means is that the common denominator between the 2 opportunities in view is the return on investments. The next time you're putting out a value proposition, ask yourself, how competitive is this value compared to if the same investor was to go into a creator's economy and put his money, or to go into the AI economy and put his money? And so we must begin to create a value proposition based on economics and not sentiment.
Exactly.
That means we need to reduce the cost of our production to make the bandwidth of profitability much wider. And secondly, I think we need to do a lot to even get our domestic funding for us to be able to kickstart some of these investment opportunities ourselves while waiting for external funders.
Exactly. Very interesting submission from you. But talking about local investment, drawing investment and support from the local credit facility platform. Today, the Central Bank of Nigeria started their MPC MPL meeting yesterday. by 2:30 this afternoon, I mean less than 40 minutes from now, they'll be announcing the MPC MPR rate. And you rightly pointed out local investment, local credit facility that will help the oil and gas sector, the energy sector to drive. What are you expecting in the regard of MPR rate? You know, the rate has been scary for businesses, both local and the ones that are even ready to do business. But at this point in time, someone like you is in the energy sector who also understand that we need to drive the local investment and put a platform that will allow access to local credit to be more durable. What do you have to say about the MPC MPR rate that's coming forth in the next 40 minutes?
I think I'm going to expect that the CBN MPR team is going to perhaps drop the MPR rate by about 50 basis points. And that's because right now we do have a real return on investment post discounting the inflation effect of about 7 to 7.5% on the money market. So I think that will drop. But away to what you're asking me for right now, this is what I want you to understand. The interest rate is one thing, and sometimes we have markets operating that way. They have an interest rate that they put out, but more so, they also have special facilities. And I can tell you for free that Nigerian banks that I operate with have reached out to me and they're asking, do you have any business in agriculture? We can give you a loan at the interest rate of at least at most 9%. And I know people that have applied for 5 million, 10 million, and they've gotten it. You know, so the thing is, I like the balance of what the CBN is trying to do, get enough interest so that people are attracted to the Nigerian, money market, because that's how we get our foreign portfolio investments.
Exactly.
But at the same time, also balance the exigencies by creating a pool of funds where the commercial banks or deposit money banks can then give it out at a reduced rate for people that are doing business. And so the key thing in this context and in the way that we have engineered the economics to fit the peculiarity of the Nigerian situation is how then are the deposit money banks doing? How well are they doing in terms of rolling out these opportunities to businesses that actually merit those opportunities?
Doc, this is quite laudable from you and instructive at the same time, talking about how the banks are marshalling this interest rate to really attract credit facilities for people who want to access it. I really want to appreciate you for coming on the show today, and your submission, I will say, are instructive going forward, particularly on Nigerian energy review sector for today. Thank you so much, Dr. Wisdom Enang, for coming.
Thank you very much. Do enjoy the rest of your day and the rest of your week. God bless you.
Amen. And same to you also.